Welcome, everyone. It's great to be with you today. My name is Martina. I'm the head of Europe at IFRS and also Global Reporting Lead. I'm excited to be here today hosting this webinar, especially given the speakers we have. In today's session, we will delve into the practical implementation of sustainability reporting standards with a focus on IFRS S1 and S2. But before we begin, I want to acknowledge that we recognize there are various sustainability frameworks and standards currently in play across the global business landscapes. However, for this webinar specifically, we'll be concentrating on the standards that were released by the ISSB. We'll explore how these standards can be effectively implemented and discuss their significance in today's business environment. Please note we are recording the webinars for others, and it will be made available on the IFRS YouTube channel and our website later this month. There are 3 learning objectives for this webinar. And after completing today's event, you'll be able to recognize the significance of efficient and effective reporting standards and frameworks in today's business environment, understand the key requirements of IFRS S1 and S2, identify tools to support implementation, and then draw from real-world examples and practical insights shared by industry experts and peers when implementing sustainability reporting standards in your own organization. Please also note that throughout the session, we'll be running a few poll questions, which you will need to complete in order to gain your CPE points. The webinar will last around an hour. We're going to have a short intro, then head straight into a discussion with our guests to understand the implications for finance teams. There should be some time for Q&A at the end, so please do drop your questions in the chat function and we will do our best to answer these. Before we move on to our discussion, I want to introduce the guests who are joining us today. We have Hiroshi Komori. Hiroshi has been a full-time member of the International Sustainability Standards Board, or ISSB, since August 2022. Before joining the ISSB, Mr. Komori served as Senior Director and Head of the Stewardship of the ESG Division at the Government Pension Investment Fund in Japan from 2015 to 2022, where he established the division and developed the pension fund's investor engagement and participation in international sustainability initiatives. And prior to the work at the fund, he worked for Sumitomo Mitsui Trust Bank, where he created an investor relations consulting service for Japanese companies, and Saitama Bank, now Resona Bank. So welcome, Hiroshi. We're very, very delighted to have you. We also have Jay Patel. Jay is Sustainability Finance Manager, Reporting Manager at Sainsbury's. She has management accounting experience in both fast-moving consumer goods and retail, gained across Birds Eye, Unilever, and now over 10 years at Sainsbury's, currently in the Corporate Responsibility and Sustainability Division. She's also part of our 2023-2024 IFRS Academy cohort, where she's working on creating a roadmap for the implementation of IFRS S1 and S2 and the reporting in line with the standards. So absolutely looking forward to hear her practical insights on the work she's been doing. A warm welcome to you both. Perfect. I would like to kick off this session by asking Hiroshi to kick us off and to provide us with an overview of the ISSB's work. We will then run a quick poll, followed by a deep dive on some of the key themes for the IFRS standards. Hiroshi, over to you. Thank you.
Okay, thank you, Martina, for the kind introduction. And hello, everyone. My name is Hiroshi Komori, and I am one of the 14 board members of the ISSB based in Asia Oceania office in Tokyo right now. And I'm very pleased to give you a background and our intended, purpose, why we made S1 and S2 and what we're doing right now and also going forward. First, I'd like to have 10 minutes to explain overview from the ISSB right now. So next slide, please. And then next one, please. Right, this is the structure of the overall IFRS Foundation. We are monitored by trustees and monitoring board overall. And we are also working together with the IASB, our sister board, which is responsible for IFRS accounting standards for the past 50 years also. And under the umbrella of IFRS Foundation, two both IASB and ISSB are working independently each other, but we are working, complementarily as well. For example, we gathered in January this year for the first time as a public official meeting between IASB and ISSB for the purpose of discussing the connectivity between financial information and sustainability information. So we talked about the management commentary project and also integration in reporting project on our side. So, but connectivity is a very big, ambitious project for the time being, compared with the resources and our efforts to make up agendas going forward. So, I just wanted to introduce our current big, ambitious, project management commentary and also integration reporting going forward for both companies and investors in a capital market. And then we will update, not monthly basis, but periodically on these two projects going forward as well. And the next slide, please. So this is our mission given by IOSCO, International Organization of Securities Commissions. So the second one, the middle one, we are requested to end the alphabet soup of voluntary initiative and to get everybody out of alphabet soup inefficient situation in the capital market. So based on my background on both sides, investment side and also corporate side, my understanding is that companies are now disclosing voluntary information, to investors without knowing appropriately which standard and initiatives companies are looking at at the moment. So therefore, companies need to pick up several kinds of voluntary standard and initiatives in making their own sustainability disclosures for many years up until now. But on the other hand, investors have a trouble as well because they always want to compare quantified and quantitative data and qualitative data as well. So in that sense, it is very hard for the investors overall to make an appropriate comparison between data and information provided companies because they are made on several kinds of standards and initiatives. So in that sense, our mission is to streamline the disclosures, world in the capital market made by, companies or users of such as investors and the financial institution. Next slide, please. So doing that, we are going to realize the decision useful situation for investors and also cost-effective situation for companies as well. So in that sense, we designed our S1 and S2 as a communication tool between companies and investors at the end of the day, rather than compliance, concept of detailed, standards. So that is a big difference compared with the current standard in a capital market. And the next slide, please. And one thing more we wanted to do is to avoid just adding single new sustainability disclosure standards into the alphabet soup situation. So that's why we selected the long-term, the trusted standards by both investors and the companies for the past 10 years, 15 years, or something like that. So those are the integrated reporting framework and the SASB standards and the CDSB frame concept and also TCFD. Those are the 4 standards which we merge into our own organization and decided to use as a very much fundamental and the basic concept and the standard into S1 and S2. So next slide, please. So this is the explanation about the global baseline based on our S1 and S2. I can give you an ongoing case in which is now being made in Japan. SSBJ, Sustainability Standard Board of Japan, started a public consultation based on the Japanese version of S1 and S2. And today is exactly the ending date of the public consultation. And towards, say, March 2025, SSBJ will gather and analyze probably hundreds of comment letters to their public consultation until now. And then after that, FSA, Financial Service Agency, Japanese regulators over disclosures, will make up a formal, official, mandatory disclosure standard in Japan. And by March 2027, all the first-tier companies, of which market cap over 20 billion US dollars, based on a phased approach. So Tier 1 the mandatory disclosure for Tier 1 companies will start on March 2027, and then followed by a little bit smaller companies with 3 billion US dollars in the March 2028, then followed by smaller companies, say March 2029 or something like that. So, SSBJ put on something Japanese flavored options for Japanese companies as a building blocks approach. So that is a typical pattern. We allow each country's regulators and the standard setters to put on their own, say, building blocks factors on our S1 and S2. And as far as it is allowable and it is say usable by global investors worldwide. So that could be a situation we can say highly aligned situation with our S1 and S2 as a global baseline. So we are now looking at more than 20 countries worldwide in Europe, Asia, and also in America, employing this kind of say global baseline plus building blocks approach, say using the each country by country. And the next slide, please. So according to the say 20 plus countries situation, we can say that in terms of GDP, more than 50% of the companies are now looking at S1 and S2 for the adoption, and also market capitalization 40%, but excluding US, more than 75% could be now in our the universe, and also GHG emissions, more than 50% are now looking at our S1 and S2. So the countries like Brazil, Canada, in America, and also Singapore, Japan, Korea, Australia in the Asia-Oceania region, and also in Europe, UK, Nigeria could be a good example. So this is the first stop here. And Martina, would you like me to stop here and start the poll?
Yeah, thanks, Hiroshi.
Okay.
Just to pause for a quick poll. Very interesting, and I guess also reassuring, I'm sure, for many in the audience to hear how many jurisdictions are looking at this, and I would say quite a quick adoption as well across the globe.
Okay, thank you very much. So this is a brief factor of S1, which is totally based on TCFD four core elements, and which refers to material information, which I'll give you later on, and also based on industry-specific disclosures or SASB standard. And one big character is that S1 and S2 are agnostic to any accounting requirement. So companies such as based on US GAAP and of course IFRS accounting standard and also Japanese GAAP can use S1 and S2 without big interference from the accounting side. And next page, please. So next slide, please. Okay. So I talk about something a little about the materiality and the time span. So when we talk about sustainability related risks and opportunities, we are not talking about each and every risk and opportunity as an empty could be affected by. So we don't say companies need to every kinds of sustainability topic based on the S1 and S2. All we say that is that please define materiality by companies themselves or towards the disclosures. So that's what S1 means as a first target for companies to do before they make a disclosure based on S1 and S2. So, and also the time span, short term, mid term, long term is another factor which companies need to do to make by themselves based on their own business model at each time span. So, next slide, please. This is a definition we picked up from our IFRS accounting standards to set up to keep the interoperability between accounting standard and also sustainability standards. So based on my background as an investor, I think that investors would like companies to define companies' own materiality, which means that material sustainability topics, which could be, say, influential to the company's cash flow, cost of capital, access to the capital, and also business model in short term, mid term, long term. So first, please define materiality by yourself. And also, please define how many years in short term, mid term, long term, because number of years might be various depending on the sector by sector, and even in the same sector could be, say, various based on the business model or product or something like that. So please do first those two jobs before you challenge our S1 and S2. So, because in my experience, what companies would like to disclose by themselves, not often much what investors exactly would like to see for their decision making with the portfolio management and the evaluation of the company's value on a short term, mid term, long term. So therefore, it is indispensable job as a first step to align companies' own definition of materiality and the investors' definition of materiality on a common basis, together with a number of the companies, short-term, mid-term, long-term. Then, based on that definition of materiality and the number of the years, companies can make a very, say, useful and influential and also, say, beneficial disclosure to come to your investors, not only long term, but also mid term, short term in a capital market. So that is our basic framework before the companies, when the companies look at our S1 and S2. And the next slide, please. And in this sense, in terms of the interoperability with ESRS could be a very important topic for companies, particularly in Europe. And we issued the joint interoperability documents on 2nd of May this year, co-hosted by ISSB and also ESRS. And the first thing is that financial materiality seems to be very much aligned between the two organizations. One is a financial impact, say, standard setter ISSB, and also double materiality standard setter EFRAG and the ESRS. But on the other hand, at the same time, in terms of impact materiality, there are several kinds of gaps or differences between the two institutions, such as the contents of the scenario analysis and also, say, carbon credit and also emission target or something like that. But please look at our documents issued on the 2nd of May. And also next page, next slide deals with assurability, which is very big and challenging topic for everybody, not only companies, but also, say, assurers and also investors at the same time. So I hope that the assurers will be prepared well for the assurability or assurance work going forward. But I'd like to point out one thing that investors already understand that the difference between audit type of mentality on financial audit work by auditors, and also the challenge is that assurance for future sustainability information, including scope 3, which is quite challenging calculation even for investors as well. So based on this correct and appropriate, say, understanding or recognition between the difference between financial audit and the sustainability future information assurance could be a very important factor. And I hope that the discussion of assurability going well going forward. And next slide, please. So up to 17, please. So this is IFRS S2 again, which is based on TCFD recommendations and also using the industry-specific disclosures, SB standards, and material information about climate-related risks and opportunities as well. So, and the next slide gives you material climate-related information which enables investors to determine the effects of climate-related risks and opportunities and also to evaluate the ability of the company to adopt its planning, business model, and operations such as such, and to understand the company's response to and strategy for managing its climate-related risks and opportunities, and also understand climate-related risks and opportunities in the company's value chain, supply chain. And next slide, please. This is a diagram which we agreed with ESRS EFRAG. In terms of climate-related portion of ESRS, I think we agreed, say, very much highly aligned, say, concept of financial materiality between the two institutions. So in this sense, I think that as far as it is related, climate-related interoperability, I think we can provide you a very much, say, useful, say, interoperability base for companies, not only Europe, but also worldwide. And the next slide, please. And this might be an answer to the one of the questions which Martina showed a couple minutes ago, that we design S1 and S2 as a set of fundamental basic framework of materiality, which is S1. And then inside S1, we picked up S2 as a specific standard for only climate-related matters, climate-related financial matters. So we are now, in that sense, I would say that I think I can go to the next slide. So this is guidance, which we prepared for companies as a process of discussion, internal discussion, as a step 1 and step 2. Left-hand side, we can give you a step 1 concept that using SASB standard, such as a sustainability development department or CSR department, people can pick up every single climate-related topics which will affect the, say, future cash flow, cost of capital, business model, such and such on a short term, mid-term, long term. So probably if that is a big, large companies, I think that you will see the, say, 20, 30, 40, 50 sustainability topics in total. And you move to the step 2 on the right-hand side. This is a job by CEO, CSO, CFO, together with board members, including non-executive directors who have a skill set of a sustainability discussion expertise as well. So here at the board meeting, companies need to define material information, material sustainability, climate-related topic which should be disclosed to investors at the end of the day. So this is the framework we design as a S1 and S2. So left-hand side, as the sustainability department, people use S2 on a climate-related matters, and also management people use S1 as a basic framework to decide material sustainability topics information to be for say investor at the end of the day. So we are now going to make further standards such as biodiversity and human capital towards our next 2-year work plan. So could be called S3 or S4, but companies can use S1 for not only for S2, but also S3, S4, and also further series of S5, 6, or something like that. So you always use S1 as a basic framework to define as a filter of materiality, which could be used for standard disclosure to your own users. And I need to could you go to page 23? Based on our comment letters from important stakeholders worldwide, our priorities in 2024 is implementation. First of all, to how to implement our S1 and S2, which was released 1 year ago. And also, we need to accelerate the speed of adoption, say more than 20 plus countries worldwide, particularly global south, developing countries. And also, as a current priorities for the next standard, biodiversity ecosystem and ecosystem services, which we call Bs, plus human capital topics as a next candidate of standards in our 2-year work plan. And educational materials on the next slide. We are now, our staff, and we are now very much busy making educational material for preparers using our knowledge hub and also some other support from our stakeholders worldwide, mainly on S1 and S2 at the moment, but we will go ahead to the S3, 4, based on the same discussion using materiality and the proportionality mechanism and the scenario analysis or something like that. And I go to page 27. This is a brief overall say discussion about the biodiversity and the human capital, which we actually started at a discussion at a public meeting in Montreal last week. So we've just started the research project on bees project and also human capital as well. For the next, probably it takes 6 months or more because differently from say climate-related matters, bees, biodiversity, and human capital are very much difficult to quantify for companies and also ourselves and the investors as well. And also they are difficult to make, say, universal standards because each region, each country, each company has different, say, say, factors and also human capital topics as well. So therefore, probably it takes time for us, more than 6 months, as a very much preparatory, say, framework. Finally, I'd like to go to page 29. We widened our MOU relationship with, say, CDP, GHG Protocol, GRI, UK TPT, and the TNFD, partly for the next standard setting work, and also partly for making further great useful, say, educational materials for preparers as well. So I stop here and then very much looking forward to the comments and the questions later on. Thank you very much.
Thank you so much, Hiroshi, and always good to hear, of course, of the plans of what's coming next, but also that strong central importance of IFRS S1 being the one where people can always go back to and refer to, even if they don't have additional specific standards on biodiversity or human capital yet. There are already some questions in the chat. We'll have time at the end. Please continue to use the chat function if you have any question for Hiroshi or Jay as she comes on screen. We'll also share in the meantime a relevant material after this presentation, for example, the link to the IFRS Knowledge Hub and harmonization on sustainability disclosures prepared by the ISSB. We're now moving on to a discussion with Jay, who will be giving us the corporate view on how some of these principles can be integrated within an organization. So welcome, Jay.
Thank you. And Martina, firstly, thank you for the introduction earlier as well. I'm really pleased to be here and to share some practical experience from Sainsbury's regarding our journey to implementing the new standards.
Fantastic, and it's great to have you, Jay, to provide that practical insight. So I'd start with your IFRS Academy. You're part of the IFRS Academy program. You've been working on creating a roadmap for Sainsbury's implementation of IFRS S1 and S2. Could you share insights from this work? Where did you start? What's been most helpful to you?
Sure, yes. So I first started by creating a project plan. It contained two main aspects, so stakeholders and the implementation plan itself. So in my stakeholder section, I found it really useful to identify the relevant stakeholder groups and capture how they will be engaged. Some of the key groups I identified were the sustainability and other relevant business leads, relevant finance teams, of course, risks and internal audit teams, and our cross-functional annual report working group. In the implementation plan section, I found it very helpful to define key milestones actions, and timelines, leading all the way up to the governance phase, including how the roadmap will be signed off. So that was my starting point. Then the next part is understanding the ISSB guidelines and country-specific requirements. So as we've had a wonderful overview from Hiroshi just now. So I think that will also be very helpful to everybody on this call. But the full guidelines are available on the IFRS.org website. And I've also, Hiroshi, I've used some of the educational material that you had on your slides. They were very useful. So I'd say, to everybody, have a look at those and also have a look at your own country specific requirement if these have been finalized. So not quite finalized here in the UK for me, but, we are expecting that they will be fully adopted. So my next point is touching on SASB and TCFD. So I wanted to, really emphasize the relevance of SASB and TCFD reporting for these standards. So some of us on this call might already be familiar with these current disclosures, whereas for others it might be completely new. So we at Sainsbury's already report on both of these annually, and as part of our external audit, our auditors also review the TCFD disclosure that's published in our annual report. So the key point I want to make here, which really backs up the points that Hiroshi has made, is that these disclosures the SASB and TCFD will transition into S1 and S2. And therefore, if you're already doing these, you're already well set up for the new standards. However, if you're not, then it's not too late. And looking into both of these, the SASB and TCFD, will help you massively prepare for the new standards. So this is because SASB fits very nicely into S1 and is particularly useful as a great starting place to help identify some industry-specific topic areas for reporting your material risks and opportunities. And TCFD fits into S2, which focuses specifically on climate-related financial disclosures. And as Hiroshi also mentioned earlier, the TCFD reporting framework has also been utilized for ISSB, namely like sections relating to governance, strategy, risk management, and metrics and targets. And hence this supports a smoother transition into implementing the ISSB standards. So the concept of interoperability, Hiroshi, that you mentioned, is really great with tackling the growing number of disclosure requirements. And it's really good to know the ISSB is not designed to be a reporting burden. And instead, the intention is to build on the good work that a lot of us are already doing through SASB and TCFD. So on my next point, I would like to talk to everyone and say that at Sainsbury's, we have undertaken a gap analysis between our SASB and TCFD disclosures and the guidelines for S1 and S2. Through this, we were able to identify any gaps between these reporting disclosures and make action plans towards addressing these gaps. So we also shared this with senior finance management so our business can understand the impact of the incoming standards and what we need to do in order to deliver the reporting. For example, the S2 places more emphasis on providing a transition plan summary and scope 3 reporting versus our current reporting. So in addition to SASB and TCFD reporting, our latest materiality study will also help feed into the ISSB reporting requirement. Because through this, we can gauge what are the most important ESG issues from our stakeholders' point of view and assess where these sit on the scale relating to business impact. The study also supported us to understand areas of emerging importance that we need to keep an eye on. So for those of you who have a materiality study or thinking of doing one, this will also help you with your ISSB reporting. And my last point on for this question here is that in addition to the above, we've also reached out to our regular third-party advisors to ascertain if there's anything else we need to consider ahead of implementation. So I would, I'd also share that as a top tip.
Thanks, Jay. Thanks for the overview. And as you've gone through this process, what are the challenges that Sainsbury's and organizations like yours face when implementing S1 and S2? What's trickier, and how can they overcome these challenges?
That's a good question. So I've got probably 3 challenges that I can talk about. I mean, we are in the process, so we haven't. We'll still be developing our reporting, but the 3 challenges that we've started to experience is firstly communicating with our senior stakeholders about what implementation of S1 and S2 actually means. So we went about this by sharing our gap analysis results and action plan and highlighting the specific areas where there is enhancement. Second is obviously identifying any material topics. So here we can use the SASB topic areas, as Hiroshi has mentioned, also areas identified through our materiality study and any other areas that feature on our horizon scanning. However, as the reporting requirement is to disclose material risks and opportunities, the challenge will be assessing these issues to identify which ones are material, and also, coming to an aligned view from our board and the senior business managers, everyone with the right sustainability expertise, coming to an aligned view on what are those material issues. So then leading, that goes into my third point, third challenge is, if we can just go back on the slide, if that's okay. How to measure and track performance across the material issues. So, SASB provides some relevant metrics with associated guidelines and definitions. So these can definitely be utilized for metric calculation. But in addition, you may need to set other relevant metrics which are aligned to your sustainability objectives, and will show whether you're on course or you're falling behind, or whether you're leaping ahead. So again, supporting identifying your risks and opportunities. So at Sainsbury's, behind each of our metrics, we have set up business owners, finance business partners who help verify the results, and governance forums which provide management and board of oversight. And a couple of our metrics are also included in our long-term incentive plans and remuneration schemes. And this also helps, get good engagement across our business. So those are some challenges.
Thanks, Jay. And I think you've mentioned from your answer clearly the central role that the materiality study plays in all of this. And we have a slide up that you kindly shared with us. Can you share a bit on how did you go about identifying these areas?
Yeah, sure. So I guess the first bit is touching on the importance to stakeholders, right? So the y-axis. Specifically identifying the issues that are most important to our stakeholders. So what we did was our issues were identified through looking at multiple sources, including horizon scanning, competitor and benchmark reviews, and through taking consideration of our own sustainability objectives and the broader ESG agenda. And then we then developed a list of 16 key issues with the support of internal experts across our business to form the assessment. We namely have like 6 main stakeholder groups, which you can see listed there on the left. So they were then engaged to understand how important these 16 key issues were for our business to address from their perspective. Our stakeholder groups, as I said, as you can see, they're consisted of a subset of our customers, non-governmental organizations, members of parliament, colleagues, suppliers, and investors. And the responses were gained through conducting surveys and interviews with these groups, with the aim being to ensure we gained insight from all perspectives that impact our business. Following this consultation, we undertook an analysis of the findings. This was carried out by drawing on expertise from our sustainability, insights, and finance teams. And is one of the exciting parts of the study, is analyzing the results, crunching the numbers. I'd like to add for that when conducting your own materiality study, you should consider what type of scoring system would work best with your stakeholders, and whether you need to apply any weighting to the responses when coming up with the final score. And that's something that you should agree upfront with your sustainability experts and get board alignment. And then, I would say also, I think the IFRS org is also going to issue some guidelines on materiality. So I would keep an eye out on that. I certainly am. So, as on the slide here. So this is the output of our last materiality study. So you can see that we've plotted all 16 key issues. And I guess another top tip for when conducting your surveys is also don't forget to ask if there's any other issues or any emerging issues that people might see in the foreseeable future, because with the materiality study, often they are repeated every so often, and you can use those points and that rich insight that you've gathered through your surveys on emerging issues or future issues, and use them in your next study to see whether those have come up in the level of importance now. So yeah, that's the materiality study.
Thanks, Jay. Thank you so much. This is very insightful. I guess I'm conscious of time, so I want to ask you very quickly if you can share with us your governance framework and what worked at Sainsbury is around sustainability reporting, but then we'll move on quickly to one more poll and the questions from the audience. We have some in the chat.
Sure. On my next slide, I have just provided a snippet of our governance structure. We have, I guess the main thing is that we have a governance forum every 4 weeks, made up of directors across the business. This is a key decision-making forum on our sustainability agenda. In addition to that, we also have the operating board, who defines business-wide strategy, adapting to new regulatory requirements and trends, reviews cross-value progress, and signs off major investment. Our PLC board has oversight of our sustainability strategy, and we also link in with our audit committee, who reviews the risk and confidence in disclosures aligned to our sustainability strategy, and the remuneration committee, who reviews remuneration targets aligned to the sustainability strategy. So these are like our main forums. They all happen with like different levels of frequency. But what makes it effective? Well, firstly, I'd say it's because we have the correct key decision makers in our governance forum with the right level of seniority, and together they provide cross-functional expertise. Secondly, to help prepare for the forums, good pre-read papers are issued with relevant and reliable information, supported with input from finance business partners from relevant teams. So our papers provide options and recommendations, but at the same time, we keep time aside during the meeting to allow discussion and decision making. The sessions are used to unblock any challenges faced or foreseen and to ensure that we continue to make progress on our sustainability goals.
Thanks, Jay. This is super insightful and obviously very good to hear also the role that the finance teams play in all of this. So thanks for sharing. So on to the Q&A. We have already 4 interesting questions in the chat. I'd like to start from the first one, actually, and probably mostly for Hiroshi at this point. So the question is just to confirm, if the ISSB standards has not been enacted by law in the country, then no mandatory implementation is required. However, can do a partial voluntary adoption? Can people, if S1 is adopted, then should S2 be adopted at the same time, if doing so on a voluntary basis?
Yeah. Okay, thank you very much. Great question. So each country, we leave, say, decision making of when and how the country's regulator and the standard setters adopt our S1 and S2 at each level. So, but until then, for example, Japan, I am now promoting Japanese companies not to stop voluntary sustainability disclosures based on their experiences so far until, say, March 2027, because that could be a very great preparatory, say, time for the day 1 of mandatory disclosure start. And also, that would be a great opportunity to start up the good communication with investors based on your voluntary disclosures rather than very much strict say mandatory disclosures, something like that. So therefore, please use the couple of years or 3 years, 4 years until the day 1 to be well prepared for say mandatory disclosure starts at each country level. So until then, I as an ISSP, not only MRA, Patel, Suloid, keeps sending the message to the companies worldwide that keep voluntary disclosure until day 1. Although TCFD disbanded, but you can keep your own disclosure based on TCFD framework as well going forward. So that is a very much strong message. Thank you.
Thank you, Hiroshi. That's super insightful. And if I may add, another attendee has added a question which is somehow linked to this. So since S2 is a bit technical for small jurisdictions, can standard setters decide to use S1 only during the transition phase?
Yeah, again, it depends on the phased approach by each country's regulators. But the thing is, we made S1 and S2 for the benefit of the investors, for the decision making and appropriate capital allocation in the capital market. So therefore, we stick to one point. If the disclosure or standard set by country level will not blur or say damage the quality of the disclosures for investors, I would say that could be fine. But our basic idea, as I explained, that S1 is very fundamental, indispensable, say materiality guide for companies worldwide for the investors. So therefore, please always look at S1, even though you would like to see S2 first of all, but please use S1 and S2 as a complete set of your disclosure, say, framework or work or discussion inside the company, and also the communication with investors. Thank you.
Thanks, Hiroshi. And then one last question, because I'm conscious of time. Is there alignment between IFRS and CSRD? Now, you've touched on it during your presentation.
Yes.
But is there any particular exemptions that you're aware of in some, for example, at local level reporting or at group level reporting for those that are reporting under CSRD?
Yes. So unfortunately, I'm a little bit far away from Europe, but say as far as my understanding is correct, I think that we would like to continue our interoperability efforts with EFRAG and ESRS, not only say climate-related matters, but because we are now going ahead with Bs and also human capital. Say as we agreed with GRI, we would like to make more interoperability, say relief for investors, for companies worldwide, not only Europe but also other areas of the world. I mean, so yeah. Also, so in that sense, our next message is that please don't wait for our completion of next standard setting work on human capital and Bs as well, because you say probably need to disclose those two items or other say sustainability topics based on ESRS prior to ISSB implementation. So therefore, you can use our S1 as a materiality filter using your disclosure based on ESRS, picking up a financial materiality say aspect for the benefit of your investors. That is our message.
Thank you, Hiroshi. That's super helpful. And I'm afraid we are up with time, but thanks all for raising the questions and answering. As we conclude today's webinar, I'd like to thank you both, Hiroshi and Jay, for your invaluable contribution. Today, we've delved into the intricacies of the IFRS standards, exploring how they guide and shape sustainability practices. However, it's always important to know that the principle and insights shared today are not confined to IFRS standards alone, and the concept and frameworks discussed can be used very much in parallel with the requirements of other standards, also Jay's process for approaching it. So we hope it provided a comprehensive foundation for your approach to sustainability reporting across various regulatory landscapes. If you're interested in finding out more on this topic, we have a range of resources at IFRS on our website, which will be added to the chat here. In particular, I'd like to highlight the Navigating the Reporting Landscape Guide, but also our sustainability reporting workshops. These are held in person in different jurisdictions, so keep an eye on our events page. And then there are also material on materiality that is coming out very soon, and a reporting maturity map, plus lots of insights on TCFD and TNFD as well, which obviously are very relevant to the application of the IFRS standards. And as we run similar webinars regularly, we're keen to get your feedback to help us make this as useful as possible.
Okay, thank you very much for the great.
Fantastic.
Yeah.
Thank you. Thank you again, Hiroshi and Jay. And thank you so much for joining the discussion. If you haven't already registered for our Net Zero Scope 3 for the Real Economy webinar, which is up next, that's taking place on 10th of September. The link to register is now being shared in the chat, and we look forward to seeing you at the next section. Thanks again to you all, and have a good rest of your day.
Thank you.
Thank you. Bye.
Thank you very much. Thank you. Bye-bye.